Hello traders, welcome to the LFB and our daily video charting review. This is for Thursday, the 28th of April 2011. My name is Marco Haig from the LFB Trade Desk. We do have to point out that there are disclaimers posted to the LFB website, and we do ask that you read and accept those disclaimers before taking information from the video. Precious metal trade held the higher ground during early Thursday trading, with the recent move lower in silver and gold bullion now stabilized. The move lower in silver that triggered for our clients a short signal from the 45.90 area completed its cycle down at 44.90 and has now reversed an overall 10% drop that was regained on Thursday as a consequence of the inaugural FOMC press conference. The long signal on silver came far too quickly and was too large an initial candle at a very late time in the US session to be able to get it out to clients. The burst of energy that hit the markets because of Mr. Bernanke's press conference allowed gold bullion to push up and test 1530 resistance, and both gold and silver bullion markets do now look just a little bit extended, with any new positions only being considered once a test of support has been seen again, and we can then gauge the resolve of those willing to buy the dips. The one commodity that did not show excessive strength in the post-Bernanke press conference was WTI crude oil. Having absorbed a 5-day sideways chop that has major resistance at 114 and support around 110.50, the path of least resistance looks to be a drop from 112.20, which will target 11.35. So it does look as though we're going to set ourselves up here for a move lower in West Texas Intermediate if we can't get a push higher on those precious metal markets, and if equity markets do start their pullback. If next week's US oil inventories come in as strong as were seen last Wednesday, the short target on WTI will be around the 109.50 area. For those traders not willing to risk taking delivery of a futures contract barrel of oil, or for those unwilling to be restricted by the USO Exchange Traded Fund 9:30 to 4 p.m. hours of trade, an alternative play could be a short on Aussie dollar. As oil prices reverse, the correlated move in global markets is to be long the US dollar. When we look at Aussie dollar, we do have a bullish pair, with the Australian dollar maintaining a strong correlation over the last 18 months with crude oil trade. It's very likely that a move lower in WTI would be replicated in a move from 10860 with targets at 10780. The margin requirement for one mini lot of that Aussie dollar trade would be around $1,100, with each pip of movement subsequently worth about $1. Any short plays on the Australian dollar are against a very strong long trend, but it would seem that the pair is currently priced to perfection in regard to forward economic expansion and interest rate moves from the Reserve Bank of Australia. A contrarian trade against the trend does need to be implemented with reduced exposure and near-term targets that bank early and often. Updates will follow as the 24-hour world of Forex and futures tracks the commodity and NYMEX market opens and close. The LFB signals, alerts and market updates on the major currency pairs, the ETF world, WTI oil, silver and gold bullion will be sent directly to clients.